Hello and welcome. My name is Ed Newton with Newton Wealth Management. We put these podcasts together to help you as you continue along the path to achieve and maintain a worry-free retirement. We hope you'll enjoy this one and find it beneficial. Elections matter to all of us as citizens and as investors. U.S. presidential election results drive policies that help shape our economy, the markets, and our lives. So it's important to think about what the outcome could mean to your wallet. And it's not just the presidential election that matters. Since much of a president's agenda requires congressional approval, the outcome of the congressional races is also key. Indeed, this time around, control of the Senate may be the key to enacting the next president's agenda. Due to the number of topics I want to cover, I've broken this into two podcasts. In this one, I want to discuss the political outlook, the economy, and tax policy. In part 2, I will look at how stocks might be affected, healthcare under the possible administrations, and then look ahead and summarize my expectations for the months ahead. Let's first examine the political outlook. As I record this on August 29th, the election is just over 9 weeks away. At this early stage in the 2020 campaign, there's plenty of time for surprises to alter the course of history, particularly given the fact that this election is taking place in the midst of a global pandemic that has hit America hard. Still, it's worth considering a range of possible election outcomes. Let's look at the 3 most likely scenarios and the potential financial implications of each. First, President Trump wins a second term and Congress remains split between a Democratic House and a Republican Senate. Second, the Democrats sweep the White House and Congress. Finally, former Vice President Joe Biden wins the presidency, but the Republicans hold the Senate. Scenario 1 is a continuation of the status quo. Scenario 2 likely brings re-regulation of some industries, higher taxes on corporations, upper-income individuals, and investors, and more fiscal stimulus than in Scenario 1. And in Scenario 3, changes to tax and spending policy are likely muted by a GOP Senate. Let's dig into some details. First, the economy. No matter who is elected, the economy will likely still be recovering from recession and hardly at full throttle. So fiscal policy, federal taxes and spending, is likely to be key to economic growth. Biden has proposed a combination of more federal spending and a redistribution of the tax burden from middle-income taxpayers to corporations, high-income taxpayers, and investors. This likely means more short-term fiscal stimulus under a Democratic presidency than a Republican one, particularly in a Democratic sweep. The tone of the Democratic fiscal plan would also be more likely to try to address growing income inequality and provide more spending and/or tax breaks geared to lower and middle-income households. Because lower-income households tend to spend most of their income gains, this might be a helpful consumer stimulus if the economic recovery is still struggling to regain traction. However, a Biden tax plan, all other things being equal, would probably be somewhat worse for the corporate profit outlook than a Trump second term and could fuel inflation longer term. Next, let's look at tax policy under Trump or Biden. During the Trump administration, federal tax rates on corporate and individual income and capital gains came down dramatically. The president has spoken of further cuts in a second term, but with the Democratic House, that could be difficult to achieve. A more likely scenario is a continuation of current tax rates. By contrast, Biden has proposed increasing the top tax rate for corporations to 28% from 21%, and for individuals to 39.6% from 37%, while treating capital gains and dividends, now taxed at a top rate of 20%, as ordinary income. Increases in corporate tax rates would be a hit to earnings, which are one driver of stock prices, though not the only one. But historically, rising corporate and individual tax rates have not resulted in falling stock prices. In the 13 previous instances of tax increases since 1950, the S&P 500, the stock index that tracks most of the major companies in the U.S., has shown higher average returns and higher odds of an advance during times when taxes are increasing. These counterintuitive odds suggest something else is going on. The market either discounts it in advance, or the economy has received stimulus to offset it. Of course, if you're facing rising individual rates, you will want to consider strategies to minimize the impact on your bottom line. In addition to higher federal tax rates on income and investment gains, the Biden campaign has talked about rethinking retirement savings tax incentives to promote more equality among different income levels. That could include reduction in the tax deduction for IRAs and 401ks, at least for upper-income people. It's always a good idea to take advantage of tax-preferred retirement savings opportunities, but that may be particularly true this year, given the potential focus on tax increases under a Democratic regime. Other strategies to consider if you are concerned about rising tax rates would be to take some capital gains or converting a portion of your traditional 401k or IRA savings to a Roth. I hope you will join me for Part 2 of Election 2020, What It Could Mean for You. We hope this information has been useful to you. Our goal at Newton Wealth Management is to help clients achieve and maintain a worry-free retirement. We are a fee-only firm. That means we don't receive commissions or any other compensation from the investments that we utilize. We have a fiduciary responsibility to our clients, which means that we always put your interests first. If you haven't set a plan or not sure that your plan is appropriate for your goals, we would be happy to talk with you and see if there's anything we can do in order to get you on track so that you too can achieve and maintain a worry-free retirement. If you have $250,000 or more of investable assets, I would invite you to visit our website at www.NewtonWealthManagement.com. There you can find out more about our firm and the services we offer. Again, the website is www.NewtonWealthManagement.com. From the website, you can also contact us to request a no-obligation, no-fee consultation. We look forward to hearing from you at www.NewtonWealthManagement.com. Newton Wealth Management is responsible for the content of this podcast and reflects the current opinion of the speakers. It is based upon sources and data believed to be accurate and reliable. Opinions and forward-looking statements expressed are subject to change without notice. Securities offered through Archer Investment Corporation. This information does not constitute a solicitation or an offer to buy or sell any security. A risk of loss is involved with investments in stock markets. The commentary provided should not be regarded as personal investment advice. Past performance is no guarantee of future results. You should carefully consider investment actions in light of your goals, objectives, cash flow needs, and time horizon.